Good afternoon, everyone. Good afternoon, everyone. I, Divya Somani, past Secretary of Ajmer branch, welcome everyone on this virtual meeting on responding to non-compliance of laws and regulations, in short we call it NOCLAR, and taxation services to audit clients under the Code of Ethics. Well, this webinar is being conducted by ESB to guide us on the various issues which have been provided as per the new code 2019. So for this, I would like to welcome all the participants and our guests, Chairman, Vice Chairman, and the Speaker, Sir, Manoj Fednes, Sir. Let me first welcome C. Praful Chajed, Sir, who's the Chairman of the Ethical Standards Board of ICAI and the former President of ICAI. Sir, we welcome you to give a brief introduction and your welcome speech. Thank you, sir.
Thank you so much. Very good afternoon, Honorable Past President, respected Shri Manoj Fednes ji, my colleague in the Central Council, very dynamic, very passionate about the ethical issues of the ICAI, Kimisha Soni ji, the staff members and the coordinator for this program, Divya. Thank you so much. On behalf of the Ethical Standard Board and on behalf of ICAI, I welcome all the participants. Dear friends, as you are aware, when it comes to the Institute of Chartered Accountants of India, the ethics are very, very important. It is one of our strongest pillar. The journey of last 72 years has been fantastic, mainly because the entire profession values ethics at its, one of the most important thing. And as things are moving across the globe, now economies are becoming one. So therefore, professionals are also coming together. We are also part of the IFAC and other international bodies. So whatever globally is happening as far as the entire profession of accountancy is concerned, ICAI is always taking pride in moving with the time, what is happening at the international level also. Many times it was been the ICAI who has given guidance to the entire world also as far as ethics is concerned. Members, you are aware that for the first time way back in 1986, we have started the Ethical Standard Board first time in India, and followed with the next year, the International Ethical Standard Board was established. So this is the history of our Ethical Standards Board. And as I was mentioning that for the profession, whatever the best things are there, we always try to do this particular thing. Today's topic, and for which we are really fortunate to have our distinguished speaker, Sri Manoj Fednes ji, who has been the past president of the institute and very knowledgeable, resourceful person, and he's going to talk about these NOCLAR and taxation services, because the world over things are changing, and this NOCLAR regime is also coming, where auditor is also expected to give the opinion or the compliance or non-compliance to certain other laws apart from whatever we all these years we as a statutory auditors etc. we were providing these services. Also now many times across the globe and in India, we are also talking about the ethical issues when it comes to our interest or the other interest with the dealing with the client. So what kind of services we can give, of course, under Companies Act 144 section and other things. Institute is also coming out with various guidelines. So these are the two important things, NOCLAR and the taxation services, for which now today's this lecture meeting has been, webinar has been arranged. And I am thankful to Kimisha because she was the last year she was the chairman of this particular committee, and since then lot of work has been done. So Kimisha will also me and also give the international thing, because she also has a technical advisor on the International Ethical Standard Board. So I'm quite sure with the rich experience of respected Manoj sir, we will be knowing the things which are going to be there. Ultimately, ICAI belongs to all of us, and therefore we always wanted that our members should be well equipped before we roll out all these things. So therefore the council has taken a decision to implement this from next April, that is 1st April 2022. But this is our effort at the Ethical Standard Board, that we are coordinating and arranging various programs so that we are equipped and we are not caught wrong just because not aware of this particular thing. So once again, welcome to all of you. Special thanks to Kimisha ji, Manoj ji and Divya Somani ji for coordinating this entire event. Thank you. Over to Divya.
Just I would request our chairman that about CA Connect search engine portal, because under your leadership we have operationalized that portal. So I would request sir just brief about that also, about search engine portal.
Again, this particular thinking started when Kimisha, she was heading this particular committee. CA Connect is one thing where, because many times we as a chartered accountants, we are not permitted to advertise our firm's profile, our expertise areas and all those things. But of late, we were finding that certain members, not knowingly fully, they were giving advertisement into yellow pages and all those things. Ultimately, as I was mentioning, profession belongs to all of us equally. Therefore, ICAI thought it fit that why not to start our own search portal. And therefore, since last 1 year, we were working on this particular portal. The President sir has recently launched that particular thing. I request members to visit that particular portal, update their personal and firm's profile, so that any person looking for the services of that particular chartered accountant into that expertise area or into that particular location, that client or somebody will be able to find these particular things on a very, very important portal that we have started. Thank you, Kimisha, for pointing out, and over to Divya.
Thank you so much, sir. As per your name, Praful, it means happy. So you have made a very delightful beginning for all of us. And with the new initiatives which the leadership is, taking, the CA Connect, it would really be very helpful for many of us. And whosoever has not visited the site yet, I would request them to kindly visit the site after this webinar. Let me tell you, friends, the mission of Ethical Standards Board to work towards evolving a dynamic and contemporary code of ethics and ethical behavior for members while retaining the long cherished ideals of excellence, independence, integrity, as also to protect the dignity and interest of the members. So I don't think these leaders are leaving any stone unturned in order to fulfill the mission of this board. So I now request the Vice Chairman of Ethical Standard Board, Kimisha ma'am, to kindly deliver her views and express her opinion about the same. Thank you, ma'am.
Thank you, Divya, for kind introductions also, and a very good afternoon and greetings, everyone. Chairman, Ethical Standard Board and Honorable Past President ICAI, CA Praful Chajerji, our very renowned and experienced faculty for today's VCM, Honorable Past President ICAI, CA Manoj Fadnisi. He was president in year 15-16 and he has been elected as the president of Confederation of Asian and Pacific Accountant CAPA in November 17. And for me, I would say always used to say about him, he's an all-rounder, because he has expertise not only related to our core areas of practice, but professional related areas. So, sir, we would like to welcome our moderator, Divya Somani ji, and from office side, Ashish ji, CA Rashmi, and Shankar ji, and dear participants. Dear members, as you all are aware about that, our Ethical Standard Board was constituted in 1976, and about present Code of Ethics. That is, we have already converted with ISBA Code of Ethics in year as per 2018. So just I would like to mention certain initiative of our Ethical Standard Board that we have. Apart from that 3-volume publications related to Code of Ethics, our member can download that publication. And we have also published certain booklets in the form of FAQ. One is FAQ relating to professional ethics of members pertaining to bank audit assignment related FAQs. Then NOC related requirement also we have published FAQ. Then books, articles and presentation related provisions we have compiled and in the form of FAQ we have released. Then KYC norms also we have uploaded on our website. And also recently we have published latest council guideline for advertisement and website related, that is updated up to February 2020. So member can download that on also FAQ on ethical issues. And one important publications also I would like to mention here about that, provisions related to independent director, solicitor, vis-a-vis they are member in practice also. And also we have uploaded video lectures on our digital learning hub. So through that learning also our member can get 2 structured CP hours. So that is about certain development. And recently we have also released newsletter, quarterly newsletter. In that particular newsletter, we have also incorporated certain quiz items, quiz questions. So our member can respond that quiz also, because we will publish name of our members also. So that is certain initiative what I would like to share with you all. Now about our revised code, and that Fadis will take up that question. So just I would like to share about revised code, that as per revised code, there is restructuring of each and every sections, and particular NOCLAR, and about taxation service to audit client. So in that particular aspects, you can find out in our publications regarding drafting convention, because in that particular all provisions and sections we have defined in the form of introductions, requirement and application material. What are requirement as per our code of ethics, and how you can implement in your day-to-day practice, how you can document that particular situation. So that we have mentioned in our revised code of ethics. And about volume 1 specifically, I would like to mention what are the difference between 3 volumes. Just I would like to mention about that 6-7 points which are really very relevant for each and every chartered accountant. First, about applicability of volume 1. What are the difference between volume 1, 2 and 3? So 1 totally ISBA conversion code of ethics, and 2 related to our domestic tax and regulation, and volume 3 related to case laws and our appellate tribunal courts case laws related. We have compiled and we have updated up to April 19. So just I would like to mention 4-5 points related to that applicability of volume 1, which is totally based on self-check and self-regulatory measures, and code is principle-based. In entire volume 1, professional accountants are required to comply with the fundamental principles and apply the conceptual framework. So, sir will address on that particular provisions related to that, how we can use that conceptual framework in that particular situation. And about volume 2, totally is a clear guideline, guidance, do's, don'ts, and other related provisions are there, which are related. Even we have incorporated provisions related to Companies Act also, which are related to auditors appointment, qualification, in-depthness, such type of provision. So second point, if there are different provision related to auditors appointment, qualification, disqualification, in-depthness provision, relative definition, auditor rotation, management consultancy services, etc. So then those provisions under which the audit is being conducted shall prevail. Third point, before taking any assignment, just bifurcate nature of assignment or work, that is the difference between audit, assurance, non-assurance, certification, management consultancy, and according to that, the relevant provisions will be applicable. Then fourth point related to whom you are providing your services, whether your client is public interest entity, individual, firm, partnership, companies, banks. According that KYC requirement and also your engagement also will be based on that. Then fifth point is there are certain provisions which impact both volume 1 and 2 of code of ethics, and we have made changes to align those provisions. So you will have to check both volume according to your situations. Then professional appointment related provision also falls under volume 1. So at the time of outcoming and incoming auditor, the provision specifically certain provision under volume 2. But regarding our current assignment also, you will have to check volume 1 provisions. Is there any threat? Is there any changes in your positions, relative definition, maybe where you are providing services as an auditor? So if certain changes are there, so you will have to check according to our volume 1 provisions also. And about that, during a continued audit, we face or get aware with certain circumstances or threats. So even in the current assignment also, we should keep a check on the volume 1 provision to ensure that there is no violation of provision of the said code. So, regarding documentation also in firm, like for example, SQC1, so other provision as per ethical standard requirement regarding partner rotations, then KYC, key audit partner, relative definition. According that, you will have to keep document also related to that particular provision. And finally, I would like to mention about sometime legally permissible but ethically not. In that case, suggestion is we should go for ethical. So whenever members are confronted with two interpretations on a matter relating to professional conduct, one ethical and the other one legalistic, so they would adopt the stricter interpretation than the more liberal one. Now about today's topic, responding to non-compliance with law and regulation is an ethics standard for auditors and other professional accountants. So it sets out the first of its kind framework to guide professional accountant, chartered accountant in what action to take in the public interest when they become aware of a potential illegal act known as non-compliance with law and regulation or NOCLAR committed by a client, manager or employer. So that is about all about NOCLAR, and sir will definitely guide you regarding correlation with SA 250 also, because at the time of financial audit, balance sheet audit, we are following SA 250 related to consideration of law and regulation in an audit of financial statement. So how these NOCLAR are different from SA 250? So I would request sir, sir, please guide on that particular aspects also related to that. And most important, most relevant related to taxation service to audit client, so specifically bifurcation about nature of services with tax return preparation, whether you can do audit of that, tax calculations, tax planning, tax service involving where valuations part are there, and of course finally assistant in the resolution of tax disputes. So all 5 segments in detail our Honorable Past President Fadnis sir will cover. So this is all about that, and now I will not take much time, and over to Divya ji. Thank you very much.
Thank you, ma'am. Thank you so much. To give real service, you must add something which cannot be brought or measured with money, and that is sincerity and integrity. And with you, Kemisha ma'am, we can simply, correlate these words. You are actually working for the benefit of all the members, and you are regularly doing the things which actually inspire all of us, ma'am. Thank you so much for being here for all of us. Next, we would like to welcome Manoj Fadnis sir, and to have his speech. So before welcoming him, let me just give you a brief, let me just read out the brief profile of sir. Just a sec. Manoj Fadnis sir. Am I audible? I think it's...
Divya, I think you can skip that profile, not required. You can make it...
Just 1 or 2 line, it would be fine, sir. We would like to know about you. And while reading this, it actually inspires that you have achieved so far and so much so far. So that is why, sir, I want to read. Manoj Fadnis sir is the former president of ICAI. He was president of ICAI for the year 2015-16. He has been the member of Central Council for 15 years since 2001. He has varied and distinguished experience in area of taxation and auditing. He has represented ICAI at various international forums where he has espoused the concerns of SMPs in the developing nations like India. He has presented more than 1,000 technical papers in seminars and conferences in India and internationally. He has been nominated on B20 for the year 2018. He has also been nominated as a member of Standing Committee on Accounting Issues constituted by RDA. Sir, we would like to know from you the responsibilities of the professional accountant in relation to non-compliance with laws and regulations, that is NOCLAR. Also, we would like you to address a few issues related to documentation related to non-compliance, and whatever you feel, sir, whatever the area it covers. So the key concerns which actually hit the professionals, I would like you to address that. Over to you, sir.
So thank you very much. And thank you, Kemisha ji, our very esteemed Central Council member and my colleague from my own city, Indore, our Honorable Past President and Chairman of Ethical Standards Board, CA Prafulla Chhajed. As his name is, he is a very pleasing personality, a delightful personality, as he was just addressed a short while ago. So thank you very much, Prafullaji, for inviting me to this webinar. And I am greatly pleased to join this with your good self and our distinguished Vice Chair of the Ethical Standards Board, very dynamic chartered accountant from Indore, CA Kemisha Soniji. Also, it is a pleasure to have a young moderator, CA Divya Somani, moderating this session. So it is a good start for discussing on the ethical issues relating to the two topics which you have identified. I'm also thankful to the entire Secretariat of the Ethical Standards Board for providing the necessary support and always being updated and being connected with what is happening internationally. Friends, it is, as you will see, that our Ethical Standards Board, under the leadership of the chair, vice chair, and the entire council, the president, vice president, has done a remarkable job. In 2018, the International Ethical Standards Board, which is the Global Ethical Standards Board, came out with a revised code of ethics. And our council adopted that in 2019, immediately. And it has been made effective from 1st of July 2020. So what has been issued globally in 2018, thanks to Prafulji and thanks to Kemishaji and the entire council, all the council members who were involved in this, they have ensured that what is applicable globally is also made part of our code of ethics in India. And when we look at this code of ethics, which is as popularly called as the IFAC code of ethics, we will find that compared to what we are already following in India, this code of ethics is not at all difficult for us to comply with. It is just certain additional things which we will have to ensure we are doing. And at the same time, there is of course more requirement for documenting our decisions which may take up, as was mentioned a little while ago by our moderator. So friends, another very proactive step, and I must compliment both Kemishaji and Prafulji for this, is that certain segments of this new code of ethics have been deferred for implementation. And we will go through the reasons why they have been deferred. But what actually delighted me is the fact that the Ethical Standards Board is organizing webinars to create awareness about these new provisions which are scheduled to become applicable from 1st of April 2022. So today when we sit in August 2021, more than 6 months in advance, with the help of the proactive approach of our council and ethical standards board, it is good that there is a discussion happening on what are the new provisions which are going to become applicable after 6 months, and thereby giving us an opportunity to upgrade our technical skills, create awareness amongst us, and know what we can do and possibly what we should not be doing on and after 1st of April 2022. A very fine point which Kemishaji made in her opening remarks is that she said if there is something is ethically right but is legally right but ethically it is not correct, she said we should carry out the ethical requirements in letter and spirit and give more importance to ethics than to what is the legal requirement. I fully endorse what she says, and I'm very happy to hear this statement because this is what our institute is reiterating, that ethics is something over and above what is there in the law. Our institute, friends, has been always coming out with guidelines, with matters before they became part of the law. So if you look at the services which we as chartered accountants are providing, we are doing number of services. Audit and assurance services is one. Besides that, taxation services and a large number of consultancy services. The clients repose so much of confidence in chartered accountants that it is normally said that a chartered accountant becomes a family friend or a family advisor to the client. So even in personal matters not related to finance, it is common that the client will rely on the advice given by his chartered accountant. So that is the trust and confidence which the clients pose in the profession of chartered accountants. And if that is the trust and confidence which the society has in us, it is imperative for us, it is necessary and important for us that we as chartered accountants carry out our professional services in such a manner that our integrity is beyond any compromise. We are seen to be impartial, and we are seen by the clients, and the clients can believe, the society can believe that we have rendered our services ethically correct. And in that context, we always say that ethics are even above what is there in the law, and therefore ethics need to be complied with. If there is a dilemma between what is legally right and what is ethically right, we should err on a safer side and do once only those things which we are sure are ethically correct. So with that background, let me start my discussion on the two specific aspects which have been put up for discussion in today's webinar. And time permitting, we can also discuss related matters. But uh, in view of the fact that these NOCLAR and tax services are so important and are going to become applicable in a short period of time, I'm very delighted, as I said, that the Ethical Standards Board has put this up for discussion. So before I come to that, and just in continuation with what the Vice Chair mentioned, Kemishaji mentioned that there are the Code of Ethics has been structured last year in a new format. So we have Volume 1, which deals with the International Code of Ethics, which is based on International Ethical Standards Board, but popularly called as IFAC Code of Ethics. And friends, as all of you would be aware, that the International Federation of Accountants is the international body which supports International Ethical Standards Board. So the Ethical Standards Board is independent. It is independent of IFAC, and IFAC is only a supporting agency for that International Ethical Standards Board. You will be surprised that the person who chaired the International Ethical Standards Board for last, I think, around 6 to 8 years is not a chartered accountant, is not an accountant. He is a lawyer, he is a teacher, he is a Greek, and he is teacher. So globally, what has been done is that we have a person who is not an accountant, who has been made the chairman of this International Ethical Standards Board. And from the perspective of the society, they have looked at what is the expectations of society from these set of auditors. So the International Code of Ethics, which was issued in 2018, is now what is we call as Volume 1. But Volume 1, this Code of Ethics has been issued by the Institute in pursuance with the powers given under the Chartered Accountants Act to frame guidelines. And therefore, this is also issued in the form of, in the legal manner as a guideline, and therefore it is binding on us. It is binding on us because for non-compliance with the guideline issued by the Institute, it can be considered as a professional misconduct. So Volume 1, the International Code of Ethics, is legally in the nature of guidelines issued by the Council, and therefore the compliance with them is mandatory. If we are found to be non-compliant, then the Institute can initiate appropriate disciplinary action against an erring member. Now, Volume 2 is what is our Chartered Accountants Act, the regulations, the applicable rules, and the applicable council decisions. So we have Schedule 1 and Schedule 2, which is there as part of our Act. And there are various other provisions which are in relation to what is contained in the Act, which is set out as Volume 2. And very interestingly, what the Council has done is brought out Volume 3. Volume 3 contains all the decided case laws in relation to the disciplinary proceedings. More than 1,500 cases would have gone to the even high courts earlier, and it is a matter of pride that out of such 1,500 cases, in as many as 1,490 cases and more than that, the High Court would have confirmed the decision of the Council, or at the most lowered the penalty or punishment given by the Council of the Institute. And that speaks of a track record, not just of 1 year or 2 years, but friends, it is a track record of last 70 years. It's a very long, very robust track record which our council has been able to demonstrate. So all those important cases have been compiled in the form of volume 3 and they are available to us. But when we rely on a case law, we should also bear in mind that professional misconduct is specific to one individual. And therefore, while correlating it with a precedent, it needs to be done in context of the facts of each case. So, like in taxation matters, what we are all familiar with is that we rely on the precedents of the core decisions of the tribunals or High Court or Supreme Court. Whereas what is contained in the matters of professional misconduct are with respect to a specific circumstances. And therefore, two cases in the matter of professional misconduct are rarely same. So when we rely on these case laws, we should do that with a caveat that these are not same as what we do in the context of taxation services, but these are matters relating to professional misconduct, and therefore two cases, though they appear to be similar, may not be the same. But it is good that these cases have now been compiled by the Ethical Standards Board and available to us in the form of volume 3, which gives us sufficient guidance for us to comply with. Then friends, today what we are focused on is this volume 1 and particularly volume 2, these two specific issues which are before us. So I will not be dealing much with the contents of this volume, but suffice to say that there are these 4 parts which are there in this volume 1. And what we are dealing with is with respect to 2 specific matters initially, and then time permitting and depending on the kind of queries which members may raise, we can take up other issues also which come up for in relation to these volume 1. Now, friends, another aspect which very striking aspect of this new volume is the way it is structured. So there is an introduction, then there is a requirement, and there is an application material. So the requirement is starts with R. If you read a paragraph in volume 1 which starts with R, so it means it is a requirement, and requirement means what is a principle. So that is what is mandatory. Then that principle is explained in the form of an application material. So with guidance, that principle is explained. And before that, there is an introduction which introduces that principle. So the R denotes the principle which is mandatory for us to follow, and application material gives more guidance with respect to that principle. Now this volume 1, which came into effect, brought in 5 major changes, and 2 of these have become already applicable. So prohibition on management responsibilities to audit clients and our duty to comply with the independence standards is already applicable to us from 1st of July 2020. And these 3 matters have been deferred, which is responding to NOCLAR, the matters relating to restriction on fees, and restriction on taxation services. Now, as we understand, and as our Honorable past President and Chairman of Ethical Standards Board and the Vice Chairperson just mentioned to us, matters relating to NOCLAR and taxation services are proposed to be made applicable from 1st of April 2021. And in that context, it is, as I said earlier, a very welcome step of the Ethical Standards Board to start discussing about these matters. So let us first discuss and understand what is this NOCLAR that is being talked about. So NOCLAR is actually non-compliance with laws and regulations. And this is applicable both to a chartered accountant who is in service as well as a chartered accountant who is in public practice. As we will see that initially what the council has done is it is restricted to only the auditors of listed companies, and it is restricted to the employees of the listed companies. So while NOCLAR globally is applicable in all services which are rendered by a professional accountant, but initially, very wisely, I would say, our council has decided that it should be made applicable in the context of listed companies. So what is the NOCLAR which we are talking about? And let us spend some time to understand what it is. So this is not applicable to all entities, but only to the auditors of listed companies, listed entities, and those who are working in listed companies. And there is a good rationale, which I feel, in making it applicable initially to the listed companies. So what happens is, a chartered accountant, as we said, there is so much of trust and confidence being posed in the chartered accountant. Now, during the course of audit, we come across a certain non-compliance with laws and regulations. And Kemishaji referred to SA 250, which is the laws, the standard which tells us that how to comply with laws and regulations applicable to the entity. But SA 250 would tell us that those laws and regulations which have a material impact on the financial statements, non-compliance of that, to what extent it affects the truth and fairness of financial statements, is broadly what we are looking into while ensuring compliance with SA 250. So for instance, if a company has, let us say, shifted its registered office from place A to place B within the city, and the change in the registered office is required to be reported to the registrar of companies within a period of 30 days. Now, assuming the company has defaulted and the company has not informed this to the registrar of companies. Now, for non-intimation within the prescribed time, the penalty which can be imposed by the registrar of companies to the company may not be so material in relation to the financial statements. And therefore, that is a non-compliance, which if we come across, we should, and we do rightly bring it to the notice of the management and those charged with governance. But rarely would we be required to give any observations on that by way of any kind of modifications when we issue the audit opinion. So no emphasis of matter, no qualifications if there are trivial non-compliances with the law. But assuming that the company has raised share capital and the company has made a non-compliance with, say, the provisions of Section 42 of the Companies Act or Section 62 of the Companies Act, which also apply in case of a private limited company. Now, non-compliance with these provisions affect your share capital. And there are serious consequences both for the company as well as for those directors who are part of the default in not complying with the provisions, the relevant provisions of the Section 42 and the rules framed thereunder, or also in case of a further issue of shares under compliance with provisions of Section 62. Now, if there is a non-compliance with the provisions of, say, such a nature, which is such a material item in our balance sheet, the share capital, and if there is a non-compliance, then we are required to properly report that in terms of SA 250. Another example could be, say, a non-compliance with Section 73 or Section 185 or 186 of the Companies Act. So 73 deals with deposits, 185 deals with, say, loans and advances, and 186 deals with matters relating to investments. And there are questions contained in our CARO where we respond to those questions in relation to the non-compliances under these sections. But if the quantum of, if the non-compliance is material, then even in the main audit report, in accordance with SA 250, we will have to give our suitable qualifications. So that is broadly what we are looking at in terms of SA 250, is to see how that non-compliance has a material impact on the financial statements. And then depending on the degree of that material non-compliance, qualifications or emphasis of matter would have to be given in the audit reports. Besides, whatever extra is required to be reported under CARO, let's say with respect to section 73 or 185 and 186. Now, SA 250 would be applicable in case of all audits. So whether it is a tax audit, whether it is an audit, if I'm carrying out an audit of an educational society or a registered charitable trust, then to the extent there is a non-compliance in that entity with respect to its financial statements, SA 250 would be applicable. So SA 250 is applicable in the context of audits. Now, what we are discussing in terms of NOCLAR is something much larger than SA 250. Because first, it applies not only to an audit, it also applies in the context of an employee of a company. Second is, and maybe that is the beneficial part under the council decision, that NOCLAR today is applicable only in context of listed companies and not in case of private limited companies or say charitable trusts or educational societies. It is not proposed to be made applicable as of now. But important is that this is the direction in which the code of ethics is evolving. And if this is the direction in which it is evolving, as Kemishaji mentioned, we should be conscious of these provisions even when we are not carrying out an audit of a listed company. So even if I am carrying out an audit of say a charitable trust, I must have in the back of my mind the provisions of NOCLAR. And this is where I would relate to what she's so rightly observed, that if there is a legal issue, so legally these provisions are not applicable in case of charitable trusts. But ethical issue, the ethical issue is that it is a non-compliance. And I must keep in my mind that what is my duty under my code of ethics under such circumstances. So NOCLAR is basis a larger issue which emerged globally. And globally they said that, see, you are auditors, you are chartered accountants, somewhere they are called as certified public accountants or different nomenclatures used in different countries globally. In United Kingdom and in the Commonwealth countries, except Canada, it is common that our professional auditors are referred to as chartered accountants. In US and other economies, the word used is certified public accountants. And therefore, the International Ethical Standard Board uses the term professional accountants. So professional accountants include all of us and not going by the respective designations which are used in different countries. In context of our institute, we are talking about chartered accountants who are auditors and chartered accountants who are, let us say, who are in service. And for the purpose of our NOCLAR, we are talking about listed entities. So the society views it in this manner, that if you are an auditor and you come across a non-compliance with a law and regulation, which is, let us say, so material to that company, or the impact of that is so material to the society at large. So the type of laws which we are talking about is, say, fraud and corruption and bribery, money laundering, terrorist financing and proceeds of crime, matters relating to data protection, tax and pension liabilities, environmental protection, public health and safety. So we are not just talking about compliance with the Companies Act, Income Tax Act, or GST, or the laws with which, or PF and EASI, with which we are dealing with generally when we carry out the audit of financial statements. So the NOCLAR provisions would say that if you are an auditor of a listed company and you find that the company is engaged in certain practices which are contrary to the established laws of the land. Now, as an auditor, what should be the duty of the auditor? Should the auditor keep silent because it is not affecting my financial statements, because no show cause notice has been given. Even if a show cause notice is given, it does not mean that the penalty will be imposed immediately. If the penalty is to be imposed, would that amount be material to my financial statements? I mean, this is how traditionally we would be looking at this subject, because this is how we have learned and what we have been guided by our auditing standards and the relevant practices to look at these matters in context of SA 250 as I described earlier. So let us say I am auditing a listed company, and that listed company is having certain manufacturing effluents, certain during the manufacturing process, certain waste is generated, scrap is generated, and say there are some polluting materials which are extracted, and these are being released in, say, certain open areas outside the factory premises. So this is clearly a violation of the pollution control laws. Now, if this is a small thing which is happening, it is okay. But if it is happening on a large basis, should the auditor keep silent on such matters? Or should the auditor close his eyes and look at differently because it is not impacting my financial statements? So the thought process which has developed globally is that looking at the confidence which is posed on the auditors, the society is expecting the auditors not to keep silent in such matters. The society says that as auditors, as auditors, the auditors are having professional skepticism. So what is professional skepticism? Professional skepticism is our ability to our professional skepticism is our ability to have our eyes and ears open, have a very questioning mind, and look at things very objectively, and not just be guided by superfluous explanations which are given and which could be so very clearly and apparently dissected. So professional skepticism means we should look at it very, very inquiringly. Now, under these circumstances, the requirements of NOCLAR require the auditors to look into these matters more carefully. So it is putting out a process. Actually, this NOCLAR provisions are putting out a process which the auditors should follow, and which an employee of a listed company is expected to follow. So the process is, if I come across some situation which is going to have a material impact on the environment, or which is going to have a material impact on the society, or even on the concept of going concern of that company itself. So matters relating to fraud, corruption, and bribery, or any of these laws which are mentioned on this slide, if you look at them. So if you suspect that as an auditor, you suspect that there is something which is not happening in accordance with the law, you inquire into that, you find out, or you observe, and you come across a situation where you conclude that yes, this entity is not complying with the relevant laws and regulations. Then as an auditor, you are expected to bring it first to the notice of the management. And if the management is not responding to your issues to your satisfaction, you are required to respond it, to escalate that matter to the next level, which could be those charged with governance, and which is, in case of a listed company, the audit committee, the independent directors. And thereafter, if that audit committee is also not looking into it, you are expected to bring it to the notice of board of directors. And for some reasons, you are not convinced that the board is also looking into these matters properly, then there is a very onerous responsibility which is cast on the auditors of listed companies. You are required to report this matter directly to the concerned regulator. But reporting to the concerned regulator is not the first thing which is envisaged. Step by step. First, the management, those charged with governance, board of directors, and then finally the regulators. If I look at what is there in NOCLAR, in relation to, as I said earlier, I always feel that the international ethical standards are easy to comply with. Our Indian Code of Ethics and our Indian requirements are far more robust and far more stringent in a way. And therefore, we are, as chartered accountants, put to a much greater test for such a long period of time that compliance with these newer provisions would not be so difficult. Now, if I look at in the Indian context, under the Companies Act 2013, friends, as all of us are aware, we have section 143, subsection 12. If there is a fraud means non-compliance with laws and regulations. Fraud has been very elaborately defined under the Companies Act 2013. And any kind of cheating, any kind of malpractices with an object to fraudulently utilize the resources of a company amounts to a fraud. So the definition of fraud is very wide under the Companies Act. So what does section 143 subsection 12 requires us? That if there is a fraud, if a fraud has been detected, or during the course of audit you come across a fraud, then the law requires that this fraud should be immediately reported to the audit committee. As an auditor, I am required to report it to the audit committee. Within a period of 45 days, the audit committee is required to come back to the auditor and tell the auditor how they are dealing with that issue which the auditor has pointed out. And if the auditor is not satisfied with the response of the auditee, then within a period of 60 days, the auditor is required to report it to the Ministry of Corporate Affairs, Government of India. So what is envisaged in NOCLAR, in a way, is already applicable to the auditors of Indian companies. And that is not restricted only to the audits of listed company, it is applicable to all audits, even if it is an audit of a private limited company. So any fraud which we come across, as it is, we are already required to report it under section 143.12 to the Ministry of Corporate Affairs, Government of India. And there is a guidance note which our institute has issued in relation to our duties in accordance with section 143.12. If we look at the Reserve Bank of India regulations, even if I'm auditing a branch of a nationalized bank, as most of us are auditors of public sector bank branches, there is a requirement under the RBI regulations that if an auditor comes across a fraud, the auditor is required to report it to the Reserve Bank of India directly. These are provisions which are applicable not just for the central statutory audit. These are already applicable in the context of a bank branch audit. So in the context of, say, audit of a housing company, in the context of an audit of a non-banking finance company, the RBI regulations would require that the auditor is required to report it immediately to the Reserve Bank of India. So what is now coming in NOCLAR is conceptually not different than what we are already doing. The only additional things it has brought in is, it has brought in all applicable laws and regulations. So what the society is saying is that don't restrict yourself to the compliance of the Companies Act, CPE regulations and the applicable laws. Have a wider lookout. If you're already reporting on frauds, and if there is a non-compliance with any of these laws, and these are just examples, so you are required to ensure that you follow a process. Now, I compliment our council that they have brought this in the context of listed companies. The listed companies are certainly a separate category because that they are the companies which are using the public funds. And where public funds are involved, be it the managers or be it the auditors, the test, the governance requirements will always be higher. And because in a listed company, you have this separate set of independent directors. So there are some people who are part of the management. There are some who are who are independent directors who are part of those charged with governance. So I would say in the same manner as you would report it to the audit committee in context of section 143.12, if you come across as an auditor of a listed company, matters relating to, say, data protection, matters relating to environmental protection. Now, these are laws where essentially we are not technically competent in a way to evaluate whether there's a compliance or non-compliance. So another very important aspect of this new code of ethics, as also which was referred to in the opening remarks by our moderator, Divya Somani also, that there is an enhanced requirement of documentation. So documentation is very important in these cases. So documentation, we look at documentation from the point of view of compliance with the auditing standards. Now, additionally, we have to look at creating proper documentations even with respect to compliance of ethical standards. So if you come across a situation where you find that, say, the effluents are being discharged by the company in a nala or a gutter outside the factory, and it is poisoning the flow of water, it is creating a pollution hazard for the people living nearby the factory, and the company says, no, this we are following adequate procedures, we are following all the standards, then what should an auditor do? So documentation becomes important. If you have come across a situation, you should respond to that with the company. Just don't discuss it, but exchange letters, exchange emails, and keep a copy of those emails. What letter you have sent to the company, what letter the company has given to you. Our auditing standards tell us that management representation letters are also to be audited. We cannot just rely blindly on what is there in the management representation letter. If the management representation letter is to be relied upon, then what is the need for the audit? The management says the inventory is verified, the inventory is valued correctly. Is it sufficient? No. The auditor is required to verify the existence of the inventory. The auditor is required to verify the existence of fixed assets, property, plant, and equipment. The auditor is supposed to verify the valuations of inventory. In the good old days, friends, you would recall, there was a situation where people used to write, companies used to write, inventory is physically verified and valuation certified by the management. Inventory is physically verified by management, valuation certified by the management. So then the question came, what is the auditor doing? If a listed company is making this declaration, then what is the need to have an auditor? And long ago, the council of our institute gave a guidance that such statements in the financial statements are discouraged because it gives an impression to the users that they have been audited by the auditors, whereas the auditor says, no, I am not verified. So it should not be ambiguous. Whatever is the exchange of letters, if there's a management representation letter, it should be duly verified by the auditor. Professional skepticism. We are required to apply our mind and see that what reply is being given to us merits consideration. So if there is a trivial breach of laws, if accidentally something has happened, company has undertaken steps to redeem those things, undo the damage, then these are not NOCLAR. This is not what NOCLAR is talking about. But recently we saw an incident in, I think it was in Visakhapatnam or in some city in down south, where there was a company which had a huge amount of poisonous gas which was leaked out, and several people not only died, not only were badly injured, some of them died also. And we were forced to think of those days of 1984 when we had the worst kind of a gas leak history ever in the world, which happened in Bhopal. So we are talking about some material important issues if there are non-compliance with laws and regulations, which are so fundamental to the even to the concept of going concern of a company. Now, look at matters relating to fraud, corruption, and bribery. Now, one may always say that, see, it is very easy to say there is a fraud, but if I say there is a fraud, there is no evidence available. Many a times have uh, we have some information that there is some money laundering transactions going on, but there is no concrete evidence. There are, under tax laws, umpteen number of cases where cash credit additions are made and they are deleted because of lack of evidence. Now, if as an auditor, I suspect some money laundering activities are going on, should I be the first whistleblower and send a letter to the concerned Chief Commissioner of Income Tax and say that this company where I am auditing, money laundering transactions are happening? If tomorrow there is a investigations carried out under Section 132 of the Income Tax Act, a search is carried out and no evidence is found, then it is possible the company may sue that auditor. So that is the kind of consequences which could arise if somebody is to irrationally and illogically apply these provisions. So the Code of Ethics gives adequate guidance. It says that you should document you should carry out adequate documentation. So suppose you have suspected certain transactions, but you don't have adequate evidence, and therefore you bring it to the notice of the management. You bring it to the notice of the independent directors. Then they are supposed to carry out an investigation. If you make a written letter to the audit committee saying that these are transactions which I suspect, I can assure you today, any audit committee of any listed company will itself undertake an investigations. If you are following what is happening, friends, in context of one of the very large and very old business entity in our country, I don't want to name that company. There are transactions which are being looked into, which happened few years back, where this company gives loan to it has a subsidiary in Dubai. The Dubai subsidiary has a step-down subsidiary. The parent has given that step-down subsidiary in Dubai has taken a loan from a bank in India, and finally that loan has been used for the private enterprises of the promoters of this listed company. And a lot of enforcement directorate matters are under investigations as of today. Some of the audit firms are being questioned about their roles. Matter is sub judice. Now, these are the environment in which we are living. If I am carrying out an audit today, and because of the provisions of Section 139, the audit firm is rotated after a period of 5 years if it is a proprietary concern, or 10 years after if it is a partnership firm. Our documentation is what is going to help us in future. So NOCLAR, if I suspect a non-compliance, but I don't have adequate evidence available with me, then I should first bring it to the notice of audit committee and say that this is what we suspect. Please carry out a proper investigation. Now, if the audit committee concludes that there is no non-compliance, take a letter from them and keep it with you. If the audit committee does not respond to you, then as it is under Section 143(12), within a period of 60 days, you are required to report it to the Ministry of Corporate Affairs. So NOCLAR is not restricted only to the commercial laws. It is much wider. It is also applicable to the employees of the listed companies. Now look at it from the point of view of the employees. I am working in a company. I am a chartered accountant. If I am aware that there are certain non-compliances happening, And if this chartered accountant keeps quiet, now, basis the work done by this chartered accountant, the audit firm will say, I relied on the internal controls. There was a chartered accountant who was working in this accounts department and he also never raised any issues. So how important it is that an employee who is a chartered accountant working in a company also is made responsible. SA 250 does not extend to the employee directly, but the concept of NOCLAR will have a bearing even on every chartered accountant who is employed in industry, which is a listed company. Now, friends, those who are working in industries may feel that this is going to create more trouble for them. Practically, they may have difficulties in bringing it out in reporting to their senior management. A person who is not a chartered accountant is not put to this onerous responsibilities. But a chartered accountant working in an industry is put to this onerous responsibility. So are we putting our chartered accountant employees in listed companies in a very perilous situation? Are we putting them in a situation that they would start feeling that why should I hold membership of the institute if I have so much of responsibilities on my shoulder? So don't look at it from a narrow angle. Because if you look at it narrowly, you are bound to miss the larger picture and reach wrong conclusions. This is an issue which was debated globally. Globally, they said, are you putting the professional accountants, auditors and employees into more difficult situations than those who are not professional accountants? And friends, mind well, globally they came to this view that no, the kind of respect, the kind of confidence which we have in the profession of professional accountants globally, or in the Indian context, in the profession of chartered accountants in India, we expect that they should react to a situation if there is no compliance with laws and regulations. So don't think that this is happening only in India. It is applicable in a small country like Sri Lanka, in countries around us, other SAARC countries, and it is happening in the developed economies also. So we are not talking about compliance only in the US and UK and in the Western Europe. We are also talking about the same compliance in developing economies of Vietnam, Cambodia, Laos, and other places. And same law applies globally. So this is a very new important aspect. Documentation is going to be very critical for all of us, and we should be very clear about what is required to be reported. The Code of Ethics says matters which are clearly inconsequential are not required to be reported. Personal misconduct unrelated to the business activities of the clients is not required to be reported. If a employee of the company is having certain, in his personal capacities, is not complying with the laws, that is not what is required to be reported. The bigger picture is required to be seen. And what is required to be reported, it is first to be escalated within the company, within the industry, to the next higher level, to the highest level within the organization. And if all that fails, then that is where the responsibility falls on our shoulders and it is required to be reported. The Ethical Standards Board globally felt that if the matter is properly escalated within the organization, it will be addressed properly in the organization. Today, it is not being formally being escalated in the organization. If you escalate it properly in the organization, it will get addressed. Now, if we also look at it in the context of listed companies, there is a concept of whistleblower. Every listed company is required to have a policy on whistleblower. So if I look at that policy on whistleblower, and if I look at this requirement under NOCLAR, principally it is not far different. Whistleblower policy is facilitated under the regulations of CPE. This whistleblowing with respect to non-compliance with laws and regulations is being mandated because of Code of Ethics of our profession. In a way, it is giving a support to what is that whistleblower policy of brought in by the Securities and Exchange Board of India, where the employees are expected to blow a whistle and bring to the notice of all concerned if there is a non-compliance going on. If there is a attempt of a bribery or corruption, it is required to be escalated. So ignorance of law, friends, is no excuse, and compliance with these provisions is mandatory. They are expected to be applicable from 1st of April 2022. And for us who are auditors in listed companies and those amongst us who are working in the listed companies need to be more careful about what is happening around us in relation to compliance with laws and regulations. And we need to consider this concept of professional skepticism with more, let's say, more inquiring mind, and look at it more objectively than maybe what we would have been doing in the past. The next aspect I would like to touch upon is the tax services. Now, while introducing this subject, Kemishaji made a very fine reference to the different components of tax services. And we need to look at these components of tax services and see what are these services which can be rendered in context of audit. Now, these are not restricted to listed entities. This prohibition would apply in context of all kinds of audits. So, tax service, as we understand, is, say, filing of income tax returns, TDS returns. Today, it is a faceless assessment, faceless appeals. So, appearing before the assessing officers, appearing before commissioners' income tax appeals, and at the most appearing before the income tax appellate tribunals is the services which we as chartered accountants are generally rendering. Now, the other related services come up are matters relating to tax planning, tax advisory services, valuation services. These are all related to, and these are within the larger concept of tax services. Now, in the context of tax service, this is what is going to be made applicable from, again, 1st of April 2022. And I would like to suggest to our Honorable Chairman and Vice Chairman and the Ethical Standards Board that in relation to tax services, the Indian position is far different and far superior to the international position. And therefore, what is happening internationally, or the kind of restrictions which are proposed internationally, should not be brought in directly in India. We should be mindful of the way the tax laws have evolved over last several years, how the guidance which the institute has given in the form of guidance note on tax audits as to what is my duty in carrying out the tax audit, and what is the famous affidavit given by the Union of India in the case of Union of India versus the Rajkot Engineering Association before the Honorable Ahmedabad High Court, Gujarat High Court, Ahmedabad branch in 1984, and which is still on record even today, that the opinion of the tax auditor is not binding on the assessee, and the assessee is free to take a different position in his tax assessments as compared to what the tax auditor's opinion can be. And the guidance given by the institute as to how to qualify, give an adverse view or a negative view, that is a modification under SS 705, or how to give an emphasis of matter. We have adequate literature which is available from our institute, which benefit is not available worldwide. The kind of tax audit, the concept of tax audit which we have in India, I don't think any other country has this kind of a concept of tax audit under section 4, as to what we have under section 44 AB of the Income Tax Act. So let me touch upon these tax services, keeping in mind the huge literature which the Institute has produced over since 1984 when this tax audits were first introduced. The tax laws which have evolved over a period of time, where we have famous decisions of Honorable Supreme Court, starting with Kedarnath Jute Manufacturing, which says that that the accounting entries in the books of accounts are not decisive to the deductions which are available to an SSE in the computation of income, and the series of decisions which have come from then till date. So my starting point in this is what is happening globally we should keep in mind, and then we should look at what should be done in the Indian context. Finally, it is for a council to decide, and whatever the council decides as what is applicable from 1st of April 2022 is what every member, you and me, are bound to follow. But let us first understand these different components of tax services. So I have put them into 5 bullet points, as you can see on this screen. Tax return preparations. Second is tax calculations for preparing the accounting entries. Tax planning and other tax advisory services. Tax services involving valuations. Assistance in the resolution of tax disputes. So what we generally say that these are the tax services, I have put them into 5 components, and this is what the international ethical standards has actually put them into 5 components. And let us look at these tax services in the context of the Indian tax laws, that is the Income Tax Act or the GST laws or any other tax laws with which we are dealing with. And what are the services which we should not be rendering to the audit client? Now, the objection for rendering tax services to the auditee arises from the fact that in many cases, what could happen is there could be a self-review conflict or self-interest conflict, in the sense that if I take a particular stand that this decision, this deduction is available to the SSE. Now, based on my view as a chartered accountant, I have advised my client that this deduction is available to you. The client makes a lower tax provision because he considers that deduction and makes a lower provision for tax payable for that year. Now, I come in again as an auditor and I certify that tax provision and say that it is showing true and fair view. So obviously there is a conflict because I have given a view as a consultant. Then again as an auditor, I have said that this view is correct. So one person cannot be on both the sides. This is the fundamental position. And therefore, the kind of tax services being rendered to the audit clients have come under question. And it is good that the Ethical Standards Board has put this into these 5 components, dissected the tax services into 5 components, so that it becomes easier for us to understand and then apply the ethical principles, which are principle based and not rule based, to the situation prevalent in India. So the first is tax return preparation. Now, last year, along with this, there was another aspect which came up, is that rendering of management, undertaking management responsibilities to the auditees. So that is one of the prohibition which is there in the new code of ethics, that you cannot undertake management responsibilities for your audit clients. And the International Code of Ethics very nicely goes on to explain what is a management responsibility. And if you are not undertaking management responsibility, it says you can render those services. In a way, what it says is that if you are rendering services without undertaking the responsibility, and there is somebody who is undertaking the responsibility on behalf of the auditing client, those services can be rendered. But under the context of Section 144 of the Companies Act, even management services are not permitted. So in context of a company, not even the management responsibilities, not just the management responsibilities, even the management services are not permitted. And I would believe that management responsibilities is a larger umbrella and management services is a component of that. So under the Companies Act, even that component is not permitted. So leave apart, the entire universe of management responsibilities cannot be rendered under Section 144 of the Companies Act. Now, when this issue of management responsibilities and management services is there, very wisely our council has designed a new term, administrative services. And in the administrative services, I would compliment our council that they have stayed apart from this discussion on management services, because now it becomes a part of the Companies Act. And under the law, if there is a term used in the law, either the government of India should clarify the meaning of that law, that is the as a extended wing of the legislature, they should clarify, or the honorable courts would clarify the meaning of that term. So it is not fit for a regulatory body like our institute to give a meaning to a word used in the law. So the term used by our council is administrative services. So administrative services, they say you can render to as a part of your management consultancy services. And till date, there is no prohibition in rendering administrative services to your audit clients. Now, taking clue from that and taking clue from, is there a conflict involved in the preparation of tax returns? And I would say that there is no conflict which is involved if I am only preparing an income tax return, because the income tax return contains a verification, which is very important. The SAC has to sign that verification. Section 140 gives who is authorized to verify a return. In case of proprietor, the proprietor does it. Individual or HUF, the Karta of the HUF will do it. In case of a partner, a partnership firm, any partner can do it. In case of a company, the managing director, and if the managing director is not available, any other director who is authorized, he can sign the return. So one who verifies the return is very important. If there is a penalty, the penalty proceedings can be initiated against the person also who has verified that return of income. So the auditor who prepares the return of income is not taking up any position with respect to what is the deductions being claimed. Now, as I said, since documentation is an important part, if you are filing returns of companies of listed entities, particularly, or where large tax companies and larger tax amounts are involved, then our engagement letter should be very clearly saying what is the nature of responsibility which I take up as a preparer of the return, and what is the responsibility of the auditee or the client. So we are talking this in terms of auditee clients. Today, we are all, many of us are tax auditors and also the tax consultants. So filing a return of income, preparing a tax return, to my mind, will not create a conflict. So tax return preparations of tedious returns would not create conflict. Second is tax calculations for the purpose of preparing accounting entries. And I put this into a different color just to highlight that this is where one has to be careful. If I am advising my client, as I said earlier, as to what is the quantum of tax the company is required to pay, then I cannot come back and say that I cannot give a true and fair view on my own estimate of tax amount. So let us be very careful as to what is the service which is being rendered. And in the context of particularly the listed companies or larger companies, or maybe even large private limited companies, one should be very, very careful in such matters. So if I have advised my client to pay a certain amount of as tax, it is basis the information which he has provided. I have applied only my tax knowledge with respect to the various deductions which are available to him or to that company, basis the information which the company has given. So if I am just applying my tax knowledge and computing the quantum of tax, then the responsibility is not on me. If there is a short payment, if there is a wrong deductions claimed, the responsibility has to be on the auditee. If the auditor takes up that responsibility, then there is a conflict. So the documentation of the engagement letter should be very, very specific. So take for instance, that there is a particular machine on which the depreciation could be 15% or the depreciation rate under the Income Tax Act could be a higher rate of depreciation. Now, how do we decide what rate to be taken? It is based on technical parameters which the SEC tells us that yes, this meets these requirements, and therefore it is to be categorized into a particular category of block of assets where the rate of depreciation is say 40%. So it is not that I have told the client that don't take 15%, take 40%. If I as an auditor or if I as a consultant tell that client, then it is my responsibility. So what responsibility we are undertaking, what is the responsibility of the auditee should be very clearly documented. And even as consultants, we should not take up these responsibilities on our shoulders because these are technical matters. And we are not competent to decide whether the tax rate, the depreciation rate should be 15% or 40% because we are not sure about the various characteristics of that particular block of that item of an asset. So tax calculations should be very carefully considered as to what is the tax calculation which the auditor is doing and what is being done by the auditee. Then friends, tax planning and other tax advisory services. So if I tell my client, an individual client comes to me and I tell him under section 80C, this is the benefit, under 80D, this is the benefit. And I give him that if you buy a car before 30th of September, you get full depreciation. Even if you buy it on say 1st or 2nd October, you still, if you use it for more than 182 days, you get full depreciation. But if you buy after that, you get 50% depreciation. Now, this is not what is the tax planning which is envisaged as what cannot be rendered by an auditor to the auditee. I would believe this is just sharing the tax laws as they are, what information is otherwise available on the websites, and just sharing that information with the client. But supposing I am involved in a structuring for my client, and my client is a company. I'm just giving an example. Suppose my client has multiple divisions and I tell my client that let us restructure the company, convert these two divisions demerge them into different entities, hive them off separately, amalgamate these two subsidiaries into one company so that there is a loss there which can be adjusted here. So if as an auditor, I'm involved in such a extensive tax planning, I'm enabling him to structure a transaction, so to say. And then later on, I come and audit that client. Would it be right, friends? Leave apart what is being proposed in the International Code of Ethics for the time being. Even as per our existing Code of Ethics, will we not say there is a conflict involved here? If I myself had told a client that if you demerge these departments separately, you may get the benefit of so much of goodwill. And then later on, I come and evaluate whether that goodwill is properly accounted for or properly quantified. There is a conflict involved. And our even existing Code of Ethics tells us that where such conflicts are there, we cannot be the auditors. So what the International Code of Ethics is going to say from 1st of April 2022 is not something new. It is already imbibed in our existing Code of Ethics also. So tax planning and other tax advisory services, if we are involved in giving tax advisory services to our audit clients, and then we should refrain from doing that if it is involving a conflicting position with us as an auditor. Even today, I will say we should not be the auditors. Though these provisions are coming in as the International Code from 1st April 2022, even today, I will say this is not permissible. And I'll just fall back on what our learned vice chair said that if there's an ethical and legal conflict, we should fall on ethics and carry out our duties in letter and spirit. So tax advisory services, be very careful. We cannot render this to the auditee. So when I talk about auditee, please bear in mind that I'm talking about a audit under 44 AB of a proprietor who has a turnover which is being audited under 44 AB. I'm not just talking about listed companies the way I discussed in context of NOCLAR. I'm talking about audit of a charitable trust which we are auditing. So there are duties as auditors and our duties as consultants should be very clearly defined. And we should refrain from doing anything which brings in a conflict. So tax advisory services could result in a conflict. But if I'm an auditor of a charitable trust, I'm filing the returns of income of the charitable trust. Now there is a new requirement that again the trusts have to be re-registered. If I'm doing all those services, there is no conflict which is involved. In my duty as an auditor and my consultancy services in re-registering that trust in accordance with the new requirements which are applicable from 1st of April 2021, there is no conflict which is involved. But conflict would be involved if I'm involved in advisory services resulting in tax planning, resulting in reduction of taxable amounts, which later on I come in and audit myself. So that is where there is a conflict with respect to my own views. I cannot come and audit something which I've already opined upon as a consultant. Then friends, next is tax services involving valuations. Now, if Section 144 of the Companies Act, those disqualifications have already been incorporated under explanation to Section 288 of the Income Tax Act. So valuation services cannot be rendered by an auditor to the clients. This is now an existing position for us. Nothing new which is coming in this new Code of Ethics from 1st of April 2022. Even today, we cannot undertake valuation services for our audit clients. Under Rule 11 UA, where there are two types of valuations which are envisaged, even the discounted cash flow method, we cannot audit even today. We cannot carry out the valuations under if the DCF method is to be used. Which of course is a separate matter of discussion, that why chartered accountants should also be recognized for carrying out those valuations. That is a separate topic. But as it is today, the rule does not permit us to carry out those valuations. So if it is only on the basis of book value method and it is basis the past audited financial results, and if I have to do only an arithmetical calculations, then to my mind there is no conflict. But because Section 144 of the Companies Act, which is also applicable in the context of Section 288 of the Income Tax Act, it prohibits. So valuation services cannot be undertaken. And definitely, if discounted cash flow method is to be carried out by us as auditors, it cannot be permitted, because discounted cash flow method will involve projecting the future cash flows, estimating the future cash flows, deciding what should be the appropriate discount rate, and then finding out the present value would require so many assumptions, which will certainly put the auditor's position into conflict with respect to the valuations involved. So valuations per se have been prohibited under the law, and therefore this is not anything new for us. Even today, we cannot carry out valuations. Then friends, assisting in the resolution of tax disputes. And this is where my humble request to the Ethical Standards Board is, please look at the Indian position differently from the global position. Because we have a beautiful document called Guidance Note on Tax Audit under Section 44 AB, which has been revised several times right from 1984 till recent dates. There was an audit which was prescribed for the purposes of fringe benefit tax, and which of course that tax has been withdrawn, but there's a guidance note on fringe benefit tax also. And these guidance notes have given guidance as to what is the position of an auditor. So let me explain that, and I'll take just maybe 5 minutes or 10 minutes on this practical example, which I've so often used in my discussions in tax audits and in others webinars. And let me use that in context of this tax services. Till 2021, we have a situation where provident fund of employees' contribution to provident fund, if it is paid beyond the due date prescribed under the Provident Fund Act, whether that amount is deductible or that amount is not deductible. This issue is dealt with differently by the different honorable high courts. So we have a decision of the Honorable Gujarat High Court, which has said that, which has ruled in favor of the department against the SSE. We have a decision of Honorable Rajasthan High Court, which has ruled in favor of the SSE and against the department. And appeal against that has SLP has been dismissed by the Honorable Supreme Court also. We have a decision of, say, Bombay High Court in favor of the SSE against the department on the same issue. Now, considering I am a tax auditor of a auditee, and the auditee is based in Gujarat, I am based in Madhya Pradesh in Indore. My client is filing the return of income in Gujarat, and therefore the decision of Honorable Gujarat High Court will prevail in that situation. Now, the decision of Gujarat High Court is against the SSE. So if the SSE wants to claim that as a deduction, and if the tax computation is done, considering that deduction, then and if that tax amount is material, you would be required to give a different opinion. As a tax auditor or even as an auditor, because the decision of the Honorable Jurisdictional High Court is against the SSE, and if the SSE still wants to litigate on that issue, because there is no decision of the Honorable Supreme Court finally, so the SSE can take up a stand that he is not in agreement with the decision of Honorable Gujarat High Court, and he wants to litigate that issue right up to the time the decision of the Supreme Court comes up. And therefore, if the auditee takes that stand, as an auditor, I would be required to qualify, because the Jurisdictional High Court is against the SSE. But if my auditee client is filing the return of income in Maharashtra, where the Jurisdictional High Court is Bombay High Court, where Bombay High Court has ruled in favor of the SSE, I will not give any modification on this issue, because the Jurisdictional High Court says that this is an allowable deduction. And if the assessing officer wants to dispute it, he can dispute it and make additions. But the decision of the Honorable High Court, Jurisdictional High Court, is in favor of the SSE, so no modification is required in that case. Now come to a state like Madhya Pradesh, where there is no decision of the Honorable Jurisdictional High Court. There are decisions of tribunals, but the High Court has not decided that issue. Now, same issue in Madhya Pradesh, because of a decision of Supreme Court which says that whichever decision is more favorable to the SSE, this was decided in the case of vegetable products, a very old and very famous decision, that whichever decision is favorable to the SSE, that decision would apply. And therefore, in Madhya Pradesh, I would apply the decision of Bombay High Court, because Bombay High Court is favorable to the SSE. But in that case, as an auditor, I'll prefer to give an emphasis of matter, because there is no direct decision of the Jurisdictional High Court. I am relying on the decision of Bombay High Court, basis the decision of Supreme Court saying that whichever is the most favorable should be applied. Same situation, different high courts, and the audit reports are differently issued. Now, this is the kind of guidance which is available to our members under the various guidance notes issued by the Institute. Worldwide, we will not find similar instances. And then, as I said, there is an affidavit when the tax audits were first issued. The tax audits were challenged, and there was a writ filed by Rajkot Engineering Association. And there is a famous decision of Rajkot Engineering Association versus Union of India, where on behalf of the Union of India, Joint Secretary or official of the government of India filed an affidavit saying that the opinion of the tax auditor is not binding on the assessee in the assessment proceedings. So if as a tax auditor, I have discharged my duties as a tax auditor, and then as a consultant to the assessee, I am proposing a view which the assessee has taken, then I don't think there is a conflict which is involved. And therefore, this assistance in the resolution of tax disputes should be looked at differently in India as compared to what is the international position. Because we do not know how much the tax laws have evolved in different jurisdictions. We do not know if those institutes have given the adequate guidance which is binding on the members. If there is a guidance which is given to be in the guidance note on tax audit, and if I don't follow that guidance, it could result into a disciplinary action against that auditor. So tax assistance in the resolution of tax disputes should be handled differently. But friends, this is an area where we need to look at what guidance finally comes from the Ethical Standards Board. If in case of a doubt, it is safer to err on the safer side. It is better to err on the safer side. And in those cases, I would say, if you believe there is going to be a conflict, if you are advocating a particular view which is conflicting with your position as an auditor, so you take a decision based on whether it is conflicting or you are able to discharge your duties as an auditor without getting involved into a conflict. So take the case if there is a deduction which is being denied to an assessee basis a particular position of deduction of tax at source, let us say, and there is a decision of a jurisdictional tribunal which is being applied in the case of the assessee. Now, whether I'm an auditor or whether I'm a consultant, I'm being guided by respective guidance notes and the decisions of the tribunals. So there is no conflict involved. So Indian position is different, and I would strongly urge the Ethical Standards Board to look at this aspect more from the Indian angle and not necessarily from the international positions. Having said that, whatever is decided by the Ethical Standards Board and the Council is binding on us. And if we believe there is a conflict, then whether the institute this becomes applicable or not, even today we should ensure that we do not render services which conflict our position as an auditor. So friends, I'll stop here. There are other matters in our new code of ethics, but since our subject matter of discussion is more limited to these two issues and several substantial time has gone by, so if Ashish Swarupji can help me if there are any queries, or if our friend Divya Somani can help me if there are any queries, I'd like to take up those queries first.
Yes, sir. Thanks for giving such a lucid description about both the topics, sir. It is a very unique style of yours in a very calm and composed way to clear all our doubts, basically. I think most of our doubts have been cleared, but still a few questions are there, sir. Let me just read that for you. One of our members has asked, suppose there is a listed company, a chemical manufacturing company is there, and the professional accountant has observed that the company is directly throwing the industrial effluents into the river without proper treatment, thereby not complying with the pollution control board guidelines. So what is the scope of work for the professional accountant here? How much how he has to report it out, and what is his duty, sir?
So very excellent question, Divyaji, and I'm very happy that our member has raised such a very practical question. And I think this is what I also discussed in the context of my presentation, that if there is a company which is discharging effluents, and this is resulting into non-compliance with laws and regulations. So the first thing which is required to be done, friends, is to see that you officially bring it to the notice of the management, and then bring it to the notice of the audit committee. because we are talking about audits of listed enterprises. And in listed entities, there is an audit committee. Audit committee, and the auditor has a direct interaction with the audit committee. So please bring it to the officially to the notice of the audit committee. And believe me, the audit committee will not sit silently on that issue. So if you bring it to the notice of them, they will certainly take steps which are required to be taken for the purposes of ensuring compliance with the laws and regulations. Please document all this with you. The letters which you give, the responses which you get, apply your professional judgment to the kind of response which you are getting. And in majority of the cases, you may not be required to escalate the matter further. Even the code of ethics says in a remote situation, if the audit committee is not existing, management is not looking at it, maybe the company is so sick that there are no directors whom you can approach. And this is a reality. There are several listed companies where they are listed, but there is hardly any governance activities in place. So in those situations, in a remote situation, look at which regulator is the applicable regulator. And as a final resort, you are required to report it to the regulator. Now, today, I would say, fall back on that guidance note issued under section 143.12, because that is very similar to this issue which is in the NOCLAR. What is 143.12 saying is talking about a fraud. Fraud does not mean just a fraud in the books of accounts. A fraud, the way the fraud has been defined in the Companies Act is a very wide definition. So please see if this can be covered as a fraud. Is this a fraud on the resources of the company? Is this a fraud on the shareholders? And if this comes in as a fraud under section 143.12, there is already a reporting advice which is there, which within 60 days of detection, you are already required to report this even today. NOCLAR is coming in from 1/4/2022. 143.12 is applicable to us since 1st of April 2014. So 8 years before this NOCLAR, 143.12 is applicable to us. So there is a huge guidance which is given to us in the guidance note on 143.12. Please go through that guidance. And I would urge friends, don't rush by just bringing it, making complaints to the regulators and thinking that this is the requirement under the new code of ethics. Please document all your steps properly, because if you do not have adequate evidence at the end of the day, there could be consequences which the auditor could be put to. But if you detect that there is a non-compliance and you have adequately documented all your steps, and even then you find that there are problems not being addressed, then the law, the code of ethics mandates you. It is mandatory for us after 1/4/22 to report it to the regulator. And if the company files a case on me, I must have all the evidence to produce that this is what was obliged on me and this is how I have discharged my duties.
Thank you, sir. So just a question here from my side. Is there any life-threatening activity from the side of company in this case for the CAs? If he tries to, point out such things.
So, madam, there could be instances. There have been unfortunate instances in our profession also, where and some of these instances are very old instances. Even when I was entering into the profession, I recall that some chartered accountant was murdered because of certain detections in cases of inventory verifications or some So these are possible. I mean, you can't rule them out. But then once you are an auditor, you are an auditor. You can't say that there is a life-threatening calls being made on us, and therefore, so please document that and take appropriate action in that context. So nothing prohibits us from withdrawing from an engagement. Even today, in the case of a listed company, see, the moment the auditor resigns, everybody is up and about why the auditor has resigned. And today, even resignations is not so easy in case of listed companies. So if an auditor resigns after 45 days from the end of the quarter, even then in the next quarter he has to come back and give the report on the quarterly results. So that is the kind of reporting which is there in case of listed companies. So there are adequate checks and balances, and we should not be unduly worried about if somebody believes that there is life-threatening positions in case of auditing, there is no point in being an auditor in such a company. How can I just say with my hands on my heart and say the financial statements show true and fair view if somebody is putting a gun on my on my head?
Right, sir. So there's one more question. Is it permissible for an auditor to sign the audit report of an assessee if there is any audit fee pending for previous years on the date of signing the audit report?
Okay. So that is also a very interesting situation which comes in because of this new code of ethics that see, earlier the position was that taking a loan from the auditee would result in a conflict, would result in the impairment of the independence. Then since 2009, when we adopted, the institute adopted the International Code of Ethics, not just taking a loan, even giving a loan can result into an independence issue. So assuming if I've given loan to somebody and that person is not returning my loan, then my independence will be impaired. So on that premises, what the Code of Ethics says is that if you're unable to recover your fees, normally you are expected to recover your fees within a few months. But in case of non-corporate entities, I would say in many cases, it is quite common that the fees is outstanding for 12 months or even a longer time. So if it is a normal position, then it is not creating a compromise or impairing my independence. What the Code of Ethics says is that if I am not taking my fees, is it in the form of a loan that I have given to the client? If I have given a loan, then I should not be giving into a loan to a client because it is not correct to have such pecuniary relationship between the auditor and the auditee. So if your fees is outstanding for a too long a period and you are not able to recover your fees, then certainly there is a threat on your independence. And in that context, you need to discharge your threat adequately. So what the Code of Ethics suggests is that get your opinion reviewed by another partner. Or if you're a proprietary concern, you should get it reviewed by another chartered accountant in public practice, so that he also comes to the same audit opinion as the auditor has come to, without his independence being compromised or being impaired in any way. So outstanding fees for a long period of time does indicate a threat, but that is what can be discharged with additional or other measures being undertaken.
Thank you, sir. I think with this, we have come to an end of the questions which were being asked by the participants. Sir, we are really honored to hear you. I've heard you earlier also on the same topic, but again and again, something or the other new things come up while you speak, and a lot more practical aspects are covered by you every time, sir. And sir, just
if you say you have heard me on this topic earlier, I must appreciate your endurance in hearing me.
Because this was newly introduced now, so I was actually curious to know what is there in this.
Thank you very much for your questions and asking those very nice questions. I'm also thankful to our team in the Ethical Standards Board, Mr. Ashish Swarup Bhattagar, Mr. Shankar, and all others. And Ashish has been helping me a lot. Let me tell you, Divya, when I was earlier a member of the IFAC SMP committee, we had given a lot of opinions on these new code of ethics, and Mr. Ashish Bhattagar would draft all those final comments and we would send it on behalf of the institute. Thank you very much.
Thank you, sir. Thank you very much, sir. Thank you very much.
So I would like to formally give a vote of thanks to everyone in the team, the Ethical Standard Board, the chairman, vice chairman, and our speaker, Manoj Fitness, sir. Sir, for you, I would like to say, people will forget what you said, people will forget what you did, but people will never forget how you made them feel. So you have really made us feel wonderful during this session. and we'll never forget the essence or the learning which you have given to us. Thank you so much, sir, for being here.
Thank
And
you.
we hope to have you in the coming sessions also.
Thank you, sir.
Thank you, sir. Thank you, everyone. Thank you.
Thank you.